Hello and welcome back to the channel. We are going to have a little look at a company called Watsco. We had it in our webinar last night where Liam took you through a lot of stocks. And the reason why we're looking at Watsco is that, first of all, it is an interesting stock. It is solid. We'll have a look at the numbers just in a second. And then we got a newsletter. Can't recall from which company. We're getting a ton of different newsletters with people talking about stocks. And one of them were Watsco. It was a fundamental newsletter looking at the numbers. And they said Watsco is a stock to buy now. That was their opinion. Now, what we're going to have a look at today is if that is true, if we think the same. And we'll also have a look at Watsco just 3, 4, 5 months ago where it popped up on our screener where the scenario was a bit different. But we'll get to that hindsight thing afterwards. Let's first look at the stock itself. Our question number 1 in our 3-point playbook is it a solid stock? We have the quality at 98 here in US and North America, so absolutely great. Overall stock score at 86, so nothing wrong there. Now we can't have a PEG ratio because we have some negative growth in the continuous earnings per share down here. But we can have a look at it here. The Altman C score is great. The analysts are, well, they are putting it, they are downgrading it a bit. We can jump over here and have a look at what they think. And yeah, we can see the same picture here. The analysts overall, their picture is slightly going downwards here, a bit sideways for the 24 number. And then they're still thinking they'll make a profit, but it's just they think the profit will be smaller. So they are downgrading. We can see the trend in the analyst estimates here are going down. I don't like that. That is a warning sign for me. Now, getting back to the numbers here, we can see that their return on equity and return on capital employed is absolutely decent. There is nothing wrong there. We can see that their free cash flow is going up. That is great. You can see they have a crazy high interest coverage, and they don't have much debt. So that is, of course, one of the reasons for that. So overall, question number 1, is this a solid stock? Yes, this is actually a very decent stock. They're paying 2.25% in dividend yield. Wonder what their coverage is. All right, so they can cover their dividend with their earnings and their free cash flow, so that is okay. But let's go into the valuations. Or first of all, let's actually have a look at the graph here. Looking at a graph like just a normal technical analyst here, there's nothing wrong with this. This is a good trend. We can see we can actually drag this regression channel all the way up here, and we can see they are in the top of the regression channel. Doesn't mean they can't go up from there, but normally when we get to these high points in the regression channel, they tend to be a bit of a pause in the stock going up. At least for this one. That doesn't go for all stocks. So the trend is great, but we can also see that if it should drop down to the bottom of the channel somewhere here, that would be a 10-15% drop. So let's have a look at the valuation chart, because that is where things get a bit interesting for this. First of all, the analyst target right now is minus 9.3% over the next 2 years here. We are saying 2 years, but we are almost halfway into one of them, so it's actually the next 1.5 year here. So when the analysts are saying minus 9.3%, I start to get a bit nervous because I know analysts are often wrong. So what if they are wrong to the downside? What if instead of a 3% gain here, they have a minus 5% in earnings per share? And what if instead of 13% here, they only have 8, like that? Now the PE here, when we take their target and divide by their earnings per share, they end up with 27 in price earning. Let's see what they have had earlier on. 27 is actually a decent range. We can see 24 on average over the last 3 years, 25. So 27 might even be a bit too high. Let's try and bump it down to the 25, which is where we have some average number. If if we make the analyst estimates here worse than they are, if we consider the fact that analysts sometimes are wrong and we are wrong to the downside here, and the price earning will be lower, well, then we are looking into a minus 26.8% development here in the stock. That is not the kind of downside I am interested in. So that is one thing we should consider. Another thing is that we actually looked at Watsco earlier on, and that was back in, I think I said 4 or 5 months ago in the beginning, but it was actually further back. It was back in October here where it popped up, because at that point the analyst targets were around 430 as well. But at that point the stock was trading down in the 340 to 350 range, meaning there was an upside from the current level to the target at around I think it was 75 or 80 points, which was basically, I think it was 22-24% upside up to this. And you can see the analysts were actually correct. It just went up quicker than they had thought, but we were considered here. I should say we didn't take it at that point, unfortunately. Of course, in hindsight we can see that we should have, but we could have made a quote-unquote easy 20-25% here in half a year, along with the rest of the market, you could say. But right now the target is actually still the same. We have just moved up here, and if we are considering this, we are looking at Watsco from back in the we can actually look at it over the last couple of years here. Since the end of 22, over the last 1.5 years, the stock is up more than 100%. That is not necessarily a reason for not buying it. We can easily buy stocks that are up 100%. However, what we are looking at here is the earnings per share in the same period is up from, well, actually at the end of 22 it was 16. Then it dropped and it is actually down. So the earnings per share right now is down compared to back in the beginning of 2023. So the earnings are down, but the price is up 100%. And as you know, we usually say that, as I said just before, that it can easily continue going up. There's nothing necessarily stopping it. But at some point, if the earnings are staying the same or falling, or even going slightly up, but the price is exploding upwards, then at some point one of two things will happen. Either the price will go sideways, and then the earnings will keep going up a bit, and the price will go sideways. So if you imagine here, the price somehow, of course not in a straight line, but it will go sideways here, and then we have some earnings that have been going completely sideways that start to pick up. At some point the earnings will start to justify this price, and the price can start going up again. Or we could see again the earning maybe going slightly up here, but the investors saying, nah, the price has gone up too far now, so we are simply going to make the price come down, so the price earning ratio is more sustainable, you could say. And then at some point the investors are saying, yeah, now the price starts to fit the earnings and we can start to let it rise again. So at this point, even though the newsletter we received, it was a huge report, there were many pages, they were saying Watsco, their products, their management, all that sort of stuff, we are looking at some very simple things here. And from our analysis, Watsco is simply not priced correctly right now. So question number one, is it a solid and good stock? Yes, it is. Number two, is it priced correctly? The answer must be no. Not in our opinion. You might have a completely other opinion and another setup and another structure and another strategy. So you might think this is the best stock in the world, and well, then you just go ahead and buy it if you think so. I'm just saying from our 3-point playbook, is a solid stock, is it priced correctly, and is now the time to buy. We don't even want to go on to question number 3 because we simply don't think it is priced correctly. All right, that's all for now. I hope it made sense. I'll talk to you again shortly. Bye.